Welcome to PhillipCapital's Weekly Market Watch. Last week, we had the World Economic Forum in Davos. This week, we have Mr. Dexter Tan, investment analyst from Phillip Securities, who will highlight some of the interesting pointers raised from the discussion. So Dexter, could you tell us more about it?
The World Economic Forum is an annual gathering of corporate leaders and governments to discuss the pressing issues facing the world, such as health and the environment. This year, the topic was on the global financial crisis. Many leaders had come up with solutions to the crisis, but the consensus was not to protect trade. As you know, protectionism is a result of the Great Depression in the 1930s. This time around, leaders are ensuring that trade will continue. Among some other interesting but controversial ideas, some had suggested nationalizing the banks as a panacea to the distress system.
So, would nationalizing the banks put equity holders at risk?
Yes, if the government takes over the banks, common equity holders could be wiped out. Investors who are holding on to troubled bank shares might want to hedge their positions to the market just in case the scenario plays out. While the political will to nationalize the banks is not present, I think equity holders should not play down the possibility of that scenario happening.
What can investors do to hedge their risk?
First, investors can look up a SBL broker, a securities borrowing and lending broker who can lend you shares, and you can take a short position on the troubled bank with an economic exposure equivalent to your current portfolio. Second, investors can look to derivatives such as options, covered warrants or CFDs, and you can take a short position on the troubled bank. Of course, you have to factor in the brokerage as well as financing charges. Lastly, investors can purchase troubled banks debt, junior debt, as well as taking a short position on the equity at the same time. This is a method employed by hedge funds and institutional investors who are active in the distressed debt arena. However, large sums of capital are usually required in this method, as the minimum sum to purchase a bond is not small.
Moving back to the markets, are there any areas which may be of interest to investors?
I think there are opportunities in the commodities market, specifically in the energy space, but on the short side, I think investors can start selling the rallies in West Texas Intermediate crude oil. Inventory levels have risen 6.2 million barrels last week to 338 million barrels. Stock levels at Cushing has also risen to 33.5 million barrels. Right now, the forward curve for West Texas Intermediate crude oil is trading at a contango whereby the futures price is above the spot price. But moving forward, I think we might see a backwardation curve as the futures price trades below the spot price as commodity producers hedge their positions by selling the forwards. The economy is in a deflationary phase, and we might not see demand as strong as before, which lends also to the downside argument for West Texas Intermediate crude in the very, very short term.
Thank you, Dexter, for your time today. With that, we come to the end of this week's Market Watch. Tune in next week for more market updates.